All kinds of companies complaining about President Trump's tariffs when they were implemented, but now many are seeing the benefits of tariff refunds showing up in their quarterly earnings report. So Doug Flynn is here with more. Flynn, Zito Capital Management. It's almost like when people get a tax refund, their money anyway, but this was, I guess, unexpected because the companies thought that they maybe wouldn't get it back, or they didn't know what was going to happen. Let me show you a couple of screens on the telestrator just to have numbers behind this. So like a big company like Apple gets a big refund, $2.2 billion. We see, Nike and FedEx, Amazon and GM. And what does that do to earnings? Well, Apple at 11 cents a share becomes $2 a share. That, so on and so forth. You see down the list here. So what about this kind of unforeseen kind of circumstance that corporate America now finds itself in with the tariffs? What do you say?
Yeah, there's a couple of options that the companies have with what to do with that. As you said, it's their money that they paid. Some of them absolutely will take it and use it keep it as profit and boost their earnings. That's some portion of them will do that. Some of them are working on ways to do some refunds, like Amazon and some of the other companies that, like Costco and FedEx, are working on ways to get refunds back to their customers. So some will do that. And some companies, even though they're getting refunds, you take a company like Caterpillar or something, they're getting some refunds. They also have, maybe they're getting $400 million in a refund, but they still owe $2 billion in other tariffs. So they're just kind of offsetting other tariffs. So there's multiple things that they could do here. We don't really know exactly what each company's going to do. But of course, as consumers, if we ended up paying more in the price of a product because of some tariffs, and now that money comes back, I think people want to get some of that money back. And I think certain companies will certainly do that.
So there's two things here, or two ways, I guess, at least, that this could help. One is the stock market. If the companies are making more money and are more profitable, stock market is up today, could continue to rise as it has been. The second is inflation. So if people are getting money back, whether it's a refund or maybe they cut prices, does it have any impact there broadly?
I think it definitely does. Like even if whether it's a gas price going down and they consider that a tax cut because you have a few more dollars in your pocket, this is the same thing. Some of the companies are also doing promotional offsets, so that will lower the cost of perhaps your next purchase. So in that way, that's a way to get costs down, even though inflation keeps moving things up. If the next purchase is down with some kind of a discount, then you're actually paying less. The cost will go down. So that means more money for people, whether they're using it for to enhance their spending and more purchasing power. Those kinds of things can show up. Or ultimately, if the companies decide to keep it and boost their earnings, that kind of thing is a short-term bump, though. So you don't really want to count too much into that. And so when we're analyzing some of these investments, we have to make sure that if there are earnings in there that are picked up by a short-term bump, we don't want to really count on that.
Speaking of short-term, couldn't this turn around again? I mean, that's been the whole point with tariffs. We never know. The president could find another workaround. He's always looking for one.
Yes, I think he is trying to do that. Yeah. And there are other tariffs. These are some tariffs. There were we have had tariffs. There's just different types of tariffs and different. So there's so many different things in here, and that's why it's all over the place. But at the end of the day, if there is some extra money that the government isn't keeping and lowering the deficit, which was the goal there, I think, then if some of that comes back to the consumer, that's got to be paramount for most people.
One other topic, Doug, there's new polling to suggest young people are not thrilled. That we've known this for quite a while, but these put numbers or new numbers behind it. Young Americans on the economy, 24% say they know someone who lost their job to AI. 48% rate the economy as poor. But then you start to see some of these numbers, whether it's 96% concerned about the cost of living, and then the political consequence. President Trump, 66% disapproval among the youngsters. And there were young voters, especially young males, who supported the president, maybe more than some people thought last time around. So what about young people in the job market?
Yeah, so my favorite stat that I saw that came out of there was that what percentage of people trust the political parties to lower the cost of living, and 36%, the favorite choice was none. Right. So that was better than Republicans or Democrats. But look, if the economy's up and the stock market is up and inflation is down, that's great. But if your rent is too high and your wages are falling behind and your debt is very expensive and you can't afford a home.
And if companies aren't hiring.
Yeah, and and AI is a concern, but it's not picking up. You lose this job here, you get a new job over there. So hopefully that will be better.
Let me run. Thank you, Doug. As always, you saw the closing bell on Wall Street.